Let's take a closer look at these four stocks: AFMD, INZY, CAPS, and AMST. Starting with Affimed AFMD, the sentiment from Wall Street analysts is generally positive, with a consensus buy rating in the 2025 price target that's significantly above current levels. However, if you dig into the fundamentals, it's a different story. X rates hit a hold, and its value and growth scores are both weak. This suggests that while there's optimism about its future, the company isn't exactly a value pick right now, and its financial health leaves something to be desired. If you're a momentum trader or you're comfortable with higher risk for the chance of a big payoff, AFMD might be worth a look, but it's definitely not a safe bet. Moving to Inozyme INZY, the technicals are actually looking pretty strong at the moment. There have been multiple buy signals from both short and long-term moving averages, and the stock has shown impressive momentum, rallying over 30% in just a couple days recently. That said, it's extremely volatile, so you have to be ready for big swings in either direction. If you're the kind of investor who thrives on volatility and can stomach the risk, INZY might appeal to you, but it's not for the faint of heart. There's also a key support level at $1.35. If it falls below that, it could trigger a wave of selling. Capstone Holding Corp. CAPS is an interesting case. Management is talking up big plans, aiming for $100 million in revenue and $10 million in EBITDA by 2025, and they're pursuing growth through acquisitions, supported by an equity line of credit. But so far, the numbers just aren't. Their revenue and EBITDA are well below those ambitious targets, and the stock has been hammered, down more than 40% in the last month and over 60% in the past year. There's a lot of execution risk here, and the possibility of dilution if they keep raising capital. If you're a speculative investor who likes turnaround stories and you believe management can deliver on their promises, you might see some potential, but it's definitely a high-risk bet. Now, for Amesite Inc., AMST. It's a microcap edtech company that's been around for a few years. It's trading at a tiny market cap, and like many microcaps, it's highly volatile and subject to big swings on very little news. The company has focused on AI-driven online learning platforms, but it hasn't yet demonstrated sustained revenue growth or profitability. There's a lot of potential in the edtech space, especially with AI, but AMST hasn't separated itself from the pack, and there's a real risk of dilution or even delisting if things don't improve. If you're considering AMST, you need to be comfortable with the possibility of losing your entire investment, because microcaps like this can be extremely risky. Putting it all together, each of these stocks is a high-risk, high-reward play. AFMD and INZY have some positive momentum or analyst sentiment, but both come with volatility. Subscribe.